basically, simply put, December outlook. Now, starting with you, Vincent, what's your outlook for December, considering, the season?
Yeah, December there is an important season in the market when you look at like what we're seeing, people taking position with respect to what we expect in December. I think one thing people will be looking at is looking at value in the market. And the end of the year is also a period where we see some portfolio rebalancing for portfolio managers. So we expect that to be some of the things that will drive performance in the market. And so people will be looking at sectors now where they can get some value. And also at the end of the year, people are looking at the investment they have made so we'll see some profit taking. I expect to see some profit taking in December, depending on the investor. But I think as we approach the end of the year and the earnings season, people will be looking at where they can get some value with respect to, especially for dividend and also for price appreciation. Also, you look at companies where we see that they are leaders in their sectors. I think those are the areas that will drive performance. Because like Mr. Ambrose was talking about MTN, I think it's one stock that we see a lot of interest for the investors. Also, the banking sector, especially when you look at those that are looking at the dividend, I think it's one area that will also stimulate a lot of interest. People taking positions with respect to dividend that will be declared for the full year dividend. And also the ability of the tier one banks to weather the storm despite the economic headwinds, I think is also a factor that people will look at. Also, the other area I think people will be looking at is the industrial goods sector, because we are seeing some performance, especially with respect to when you look at the performance of the Dangote, Brass, Cement, and also WAPO. I think there are stock that people will be looking at in terms of taking position, both for dividend and also for capital position. You know that in terms of infrastructural deficit, there's still a lot of growth in that space. So I think it's one area people will be looking at and taking position both for dividend and for capital position.
All right. Very quick, let's have your thoughts on that.
Yeah, for me, you have mentioned the sector to look at, but I want to add to saying that for investors to invest wisely in this market, what you should look at a company that is growing their earnings, price is going up, and volume is going up in that company, that particular stock. Yes, if you go back and look at the last third quarter GDP that was released, there's some sectors that perform strongly in that result. Despite that, we have a decline from 3.54 to 2.
We're also considering the season we are in.
Yeah, exactly.
Okay.
If you are seeing that result already, that GDP figure, we saw that the banking and finance sector attributed a lot contributed to that. You saw also agri sector. That means we have a Komu, Presco, livestock in that sector. We see the banking sector, oil sector. Yes, we're talking of crude oil. We're talking of those oil that are into marketing. As we speak now, there's queue everywhere in Nigeria as we speak now. Those marketers in those kind of business are going to make boom of profit for the end of the year. On that note, as an investor, look at those companies that are into marketing as we speak now, especially Internal Oil, Toyota, and Adobe. These are the ones I know that, yes, go and look at their results. These results are very, very impressive. And we are also in this season, at the end of the year, go and check their results, because we're already in December. Today is second already, and the queue will last, I tell you, till next week before we can start seeing it, discipline or going out, slightly. But that tells you that these sectors are where you should be looking at now, because the end of these companies that are today are looking up, their prices are going up, and volume in this particular stock are also looking up. We should guide you as an investor too, because I believe that the last month of the year, December in the history, in the past 20 years, it's about only 2 times or 3 times December closed down. Other December has closed positive. So that there's something that should tell you December that month is the month that everyone to position for corporate action in the first quarter of the coming year. Already this is the end of the year. Then we're expecting to be company that has December as year and to release their corporate actions in January, February, and March. And for you to buy early, it's better you buy now, because if you are waiting to buy in March or in February, where others are prices are going up, we are going to miss that. It's better you start positioning now, so that when others are seeing those numbers coming, because as we speak now, by January we see unaudited account for those companies. By February, starting the audited one. January unaudited, February audited. We can see that these are things that will guide investors. For that, you need to push on now before that number start coming. And those corporate actions is very key for investors. I think it's how they should invest now, not just sitting back and be complaining, oh, Nigeria economy is not doing well. But as I speak now, some sectors are doing well. And I said it earlier, go back and look at your GDP, see the sectors that have done well. It's a guide for you to know where to put your money.
All right, we'll take a break now. When we come back, we'll continue the conversation. Stay with us. It's Analyst Hangout. Glad to know you're still with us. Deposit money banks increased their holdings in Nigeria Treasury bills by 1.55 trillion naira between July 2021 and June 2022 to stand at 2.28 trillion naira. Commercial banks accounted for 50.5% of the total 4.5 trillion naira Nigerian Treasury bills held as of June 2022, compared to 24.4% recorded as of the corresponding period of 2021. The banks increased their holdings from 728.9 billion naira recorded as of June 2021 to 2.28 trillion naira at the end of June 2022. I'm good to know you are with us now, Kasimu Garuba Kurfi. Thank you for joining us, sir.
You're welcome.
All right. So let's start with you. This is a huge leap. I mean, if you ask me, that's what I would say. What do you think is responsible for this?
It's the increase of the rate. You know, banks, they have moved the rate to as high as 19% they are paying for the depositors because they got a good rate to deposit their money with the CBN. So it all attracts this, and that is why people are rushing because they are all hedging against the inflation. And by the way they are going, it seems that the money market is taking the day, and Treasury bill is one of it. Issued by the CBN, they keep on continuing issuing it for the mopping the liquidity in the market to cut inflation.
Okay, thank you so much. Well, Mr. Vincent, if you can hear me, I'd like to have your thought on this. What do you make of this development?
Yes, like Alaji said, you can attribute the fact to the because you are comparing your comparison between 2001 and 2020. 2021 and 2022, and you know that 2021, when you look at the rates in 2021, we had lower rates compared to now. From May, when the CBN started increasing the MPR to where we are now at 16.5, you can see that there's from 13%, 11.5 at the beginning of the year. You can see that there has been an increase in rate. So, and with that, we saw the increase in lending rate and also increase in treasury bill and also an increase in fixed income other fixed income instruments. I think that's the major attraction where we have seen the increase in the banks investing in treasury bills, and because, like you know, it's risk-free, and so they are pouring the money there. And also another factor we can attribute that to is the increase in money supply. If you look at the money supply in the system, there has been an increase between last year and this year. So I think that's part of the reason why we have seen the bank pushing in. The banks are always looking for the easy way out, and investment in treasury is one risk-free instrument that they will always consider increasing, because as rates are increasing, you also consider the fact that there is also the risks of lending for the real sector is also going to increase. I think that's part of the factor why the bank will definitely have to push into fixed risk-free instruments.
All right, thank you so much for your thoughts. We'll take a break now. When we come back, we'll turn our attention to the earnings season, and this time we're considering the cement companies. Stay with us, we'll be right back.